All right, welcome to this new video. In this video, we're going to discuss a A+ setup, and it's one of the most well-known setups of the industry. It's the 2022 ICT Mentorship. What it basically does is it goes over a few rules. The first rule is a liquidity grab. So right here, you have bullish order flow, and you see a big move downwards. This is most likely due to a news event like a red folder, and then you see a market structure shift with displacement up, breaker structure right here, and then it leaves a fair value gap or a order block, and your entry is right here and targeting a 1 to 2, 1 to 3. Really important here, the fair value gap or order block should be in premium or discount. If you're not sure what premium discount is, I will leave a link to the video in the description. It's basically you do a flip from the low to the high, and if you do it on a long, it should be in discount in the bottom 50% and vice versa for a short setup. So here the price comes to discount of the range inside of the value gap, so you're good to go. Now let's go over some examples. Here on the 6th of March, we have some bullish order flow, and around 10 a.m., so probably a news event, you see a big spike downwards. If you see this, your eyes should immediately go to, okay, where's liquidity? And liquidity is here at this consolidation with some equal lows right here. So we see this liquidity grab right here. What you then should do is go to the lower time frame. You go to the 1 or 5 minute. Let's go to the 1 minute and look, do you see that market structure shift? You see a market structure shift right here. And the other rule was it should be leaving a fair value gap behind with displacement. It does right here. We have one fair value gap, and we have also one fair value gap down here. And it should be in discount of the range. Swing low, swing high. It's not there yet, so we're not entering right here. We would only enter 50% of the range. Stop loss below this low, also below this low, and then target a 1 to 2, 1 to 3. So I would target this highs or these highs, and let's see what price does. And as you can see, price went to the discount of the range, went in the fair value gap below here, and then went to these two highs. So this will be a clean 1 to 2. And you've taken this inside the well-known silver bullet window from 10 to 11 a.m. And the same day, we took out the sell side liquidity right here. We also had some buy side liquidity resting above here. And we're going to do the same. If price takes liquidity, we're going to lower time frames to see a market structure shift with displacement. Looking for the fair value gap or order block in premium discount. And we're going to do the same strategy. So right before lunch, we're taking out this liquidity. Let's see what price does here. It keeps going. So our target could also have been here, but you should be very happy with this trade. And you can just watch price until it makes a market structure shift or just continues. You're done for the day. But this setup is only for a market structure shift with displacement. And we see that right here. We see at the end of the lunch, we see some displacement down here. Let's wait for displacement down, leaving a fair value gap. We don't see any displacement right here because there's no fair value gap. And here you see that displacement. This is also part of the 2022 mentorship, the 1:30 p.m. sell model candle. So we're going to the 1 minute. If you go to the 1 minute with our rules, we already could have spotted this market structure shift right here. Price took out. You can take this low or this low. This is the last swing low right here, leaving a fair value gap right there. Now it's also important you take the swing high and the swing low. You draw a fit, and it should be in the premium of the range. So the bottom 50%. That's right here. So it touches the fair value gap again, and it even takes out this liquidity here, and then it goes away. This will be your lunch hour displacement and entry inside the PM, New York PM session. And if you could have missed that, also look if we can re-enter. So we already see this swing low right here. And if this gets taken with displacement, it does, leaving a fair value gap. So we're doing the same. Swing high to swing low. Above 50%, you can enter. So you could have taken an entry right here at the fair value gap, targeting a 1 to 2. So you'll be done already. 1 to 3 to the swing low right here. And if you had missed that, you can look for a setup right here. We see this displacement, leaving 2 fair value gaps. I would take in the first one you encounter inside premium, like this one, fair value gap right here. It can touch into this fair value gap as well. So you need to leave room for a stop loss to have that stop below the swing high, or above the swing high. Target 1 to 2. And let's see what price does. Comes back to the fair value gap. and it goes to take profit at the end of the PM session. Not sure if it takes right here, but it would right here. The main reason I want to show you this setup is because it appears almost every single day. And right here, I want to show you an example that is not always working. So right here, we're looking at the London kill zone from 3 a.m. And we see here we're taking out liquidity and we see displacement up. So we're going to the 1 minute and you see here massive displacement up, leaving a fair value gap and also leaving a fair value gap below here. And if we have our rules from swing low to swing high, we can only take our trade from the discount, stop loss below here, targeting a 1 to 2, 1 to 3. And if you can see, if we going to look at the price, that it's going to leave without us. And that's okay. So in this example, you could have missed it. If you are okay, you can always trade the first value gap. If you want to follow your rules very strictly, you could have missed this trade, and that's fine. There will be more entries coming just later in the day, or maybe the day after. This is the day after our previous setups, as you can see. So you could have like 1, 2, 3 trades already. No, you have missed this one, and so let's see if we can grab one later this day. So now you've missed your entry in the London session. You come back for New York, and you're like, okay, where is liquidity grab? And your eyes should immediately go towards these equal lows right here. See a big wick, and then a reaction from that. So we're going to a lower time frame. We know the drill. So we want the liquidity grab. It does after New York open. Displacement up, leaving a fair value gap. And now comes the tricky part again. Are you going to take it or not? I won't, because the fair value gap is in the premium of the range. You have a little fair value gap right here. So I would have taken the trade. It goes here and targeting a 1 to 2 or 1 to 3. See what price does. It only touches in the first value gap, and that's in premium of the range, so we won't take it. As you can see, it always repeats. So if you are okay with taking the trade a little higher, so premium of the range, that's fine. It's up to your rules. The 2022 mentorship states exactly this, so you need to take it in discount. It doesn't, so you skip the trade. A new opportunity will form perhaps later this day or the day after. As you can see, all the examples are in the span of 48 hours. So lots of opportunities. Don't stress if you miss anything. So where's the next liquidity point? We see a big move up, and your eyes should immediately go to these equal highs right here. And we take them out around 2 p.m. So let's go to the lower time frame to see if we get that massive displacement. Well, we do. We get massive displacement, breaking structure right there. And you know the rules by now. Displacement leaving fair value gaps. We got 1, 2, 3 fair value gaps. Swing high to swing low. And we're going to take it from the premium, so above the 50%, high below, high above there. Target at 1 to 2. Let's see if we can find a good target. We got some relatively equal lows right here or there. Let's do 1 to 2. For example, price touches it and goes lower. So here, price comes to the OTE entry. I'm going to make a dedicated video for that as well on this channel. OTE entry, and it moves away. And for this last example, we are at Friday, March 8th. And again, this cannot be cherry picked. I'm handing this to you like every single day right now, 3 days in a row. We take out these relatively equal highs, and then we displace lower, leaving a fair value gap right here. If you draw your fit from swing high to swing low, 50%. So you're short in premium, high above here, and target a 1, 2, 1 to 3. This is a really clear draw on liquidity, this swing low. So we'll do right here. Could also target these lows right here, but just lowering fruit, and you have your A+ setup. In this video, we went over the A+ setup from the ICT 2022 mentorship. It goes over a liquidity grab, then your market structure shift with displacement, leaving a fair value gap. You can enter both in the fair value gap and inside the order block, and you want to target a 1 to 2, 1 to 3 when your short in premium of the range and you long in discount of the range. I hope you enjoyed this video. If you did, please like and subscribe, and I'll see you in the next one.